Good afternoon, good morning, and maybe even good evening. Welcome to another Tnooz webinar, Transforming Travel Payments. This is the second of two that we have done this week in conjunction with eNett, which is a joint venture with Travelport. What we decided to do with these, because we wanted to target specific audiences, the one earlier this week was aimed at readers and indeed customers and listeners in the Asia Pacific area. This one is specifically designed for those of you in Europe, Middle East, Africa, and also in North and Latin and South America. So, as I said, this one has been produced in conjunction with eNett. Thank you very much to eNett for their support, their continued support over these two webinars. Broadly, so travel payments, it's an incredibly complex landscape, but with rapidly changing points of sale, seemingly and increasingly complicated distribution chains and indeed legacy payment systems competing with, dare we say, new payment innovations, we thought it was about time, and so did our friends here at eNett, that we clarified some of the options and the costs associated with this. So what we're going to do over the next, we'll be up to an hour. What we're going to do is learn about the true costs of payments, you know, how you can reduce your exposure to things such as credit card fraud, surcharges, and look at the foreign exchange system, and work out how you can improve efficiency with your own payment processing and integrating within the GDSs and other systems. So I'm delighted to say that we are joined with a panel of luminaries, and we can have the next slide first of all, please, Jean. As always, I'm joined behind the scenes by Quinn, who's my glamorous co-founder here at Tnooz, but he acts as our producer. He'll probably be joining us for the Q&A at the end. And I say we have a panel to help us along for the ride over the next 55 minutes or so. The first of which is Jason Hancock. He's Head of Channel Development at eNett International. As I said, eNett is a joint venture with Travelport, the large IT and global distribution system. And we're also joined by Yofe, who's the Senior Business Leader for Travel Payments at MasterCard Worldwide. Everybody will have heard of MasterCard, of course. So if we have the next slide. As always, with any of our Tnooz webinars, we are recording the entire thing, as we did earlier in the week for the Asia Pacific focused one, and we hope to have both of those recordings onto a single article on tnooz.com within the next 12 to 18 hours or so, and we'll also be including all of the slides that you're about to see over the course of this as well. Now, as always, we have a Q&A at the end. You'll be able to send in your questions over the course of the next 50 minutes for us at the panel especially. You can do that by hitting the questions module on the right-hand side. It's usually the right-hand side for everybody of your dashboard as the screen as you look at it now. And also, we'll be interspersing the entire thing with a series of polls, questions, call them what you like, just so that we can do a little bit of a temperature check on how people are thinking around this particular issue. So without further ado, let's have that first poll, please, Jean. And it's very simple. How confident are you at being able to select the most appropriate payment solution for your business? Number one, extremely confident. Number two, somewhat confident. Or number three, quite doubtful. If you can cast your votes now, that'd be great. Thank you. Okay, those final attendees are now voting. And I think in a couple of moments we'll be showing you the results of this poll. Okay, let's have those results up now, Jane. Okay, 14% of you said you were extremely confident. 17% say you're quite doubtful. But a heady over three-quarters there at 68% say you're somewhat confident, so not extremely, but you're kind of there. So food for thought as we dive into the first part. If you can close the poll down there, Jean, that'd be great. And we'll go to the next slide. So without further ado, as I say, I'm going to hand over now to Jason Hancock, and just a quick reminder, he's Head of Channel Development at eNett International. He has been in Dubai all this week at the Arabian travel market, so he's a few hours ahead of me. It's 3 o'clock here in the afternoon in the UK. But welcome, Jason. Nice to have you on again for our second webinar this week, and I'm going to hand over to you straight away. The floor is yours, sir.
Many thanks, Kevin, and Hello, everyone. Jean, if you could flip to the next slide, the agenda slide. So in the next 30 to 40 minutes, we're going to take a look at some of the key insights and emerging trends coming out of the Focusrite in-depth study into the global travel payments marketplace. It's a research program that's been sponsored jointly by both eNett and MasterCard. And by way of a quick agenda, firstly, I'll quickly step through some of the research methodology that was used, and then highlight some of the emerging trends coming out of that study. And since eNett is one of the major providers of virtual card solutions to the travel industry today, we'll take a very specific viewpoint in how virtual card technologies are helping travel companies to solve some of the challenges highlighted in the research and presented by these emerging trends. I'll then hand over to Luis from MasterCard, who will talk about the true cost of payments and why it's so important to take a wider perspective when considering cost of payments. And finally, we'll close with a summary and questions. So, Jean, next slide, please. So let's start by giving a very brief overview of the research. It's a special project by Focusrite entitled Payments Unsettled, Cost, Opportunity, and Disruption in Travel's Complex Payments Landscape. And in summary, the study helps the reader to understand the complex travel payments landscape. It takes a look at some of those key emerging trends and the main challenges with payments faced by travel retailers and suppliers today. And for eNett, really our motivation for sponsoring this research was threefold. Firstly, to better understand the pain points agents and suppliers have when making B2B payments, to better understand the perception around payment costs and how these differ by region and type of organization, and also and finally to get a broader industry viewpoint on how the usage and relative merits of virtual card solutions. So, this was a qualitative study conducted over 3 months, started back in November 2012, and it surveyed more than 1,500 people from across the travel industry. And the slide you're seeing now on your screens shows the two major approaches that were taken to segmentation. On the left-hand pie breaks down the field of respondents by industry segment. We see there in the majority in the blue travel retailers, which includes travel agencies, travel management companies, and OTAs. In the red there, suppliers, which includes airlines, both low-cost carriers and traditional airlines, and hotel and lodging suppliers as well. And then in the purple, wholesaler and tour operators, and finally the green, which represents travel technology and payment system providers. The right-hand pie breaks down the survey of respondents geographically, and basically what this shows is that the study has a balanced representation across all major global regions. Next slide, please, Jean. We also see across the industry segments shown here, so retailers, wholesalers, and suppliers, there's a broad representation in respondent size as measured by gross sales in US dollars per annum. And reading this chart from left to right, so considering the blue, the darker blue bars and the red bars together, you'll see that in fact over half of the respondents in the survey were relatively small. In fact, with less than $5 million US gross travel bookings per year. Next slide, please, Jean. And finally, we look here at the mix of respondents by job function, strongly represented in the blue and the red by sales and marketing, business development, and operations, with 11% of the respondents from a finance, accounting, or procurement background. And the smaller retailers we just talked about, most likely to have cross-functional responsibilities, which is shown on the chart in green. Next slide, please, Jean. So now we get to the more interesting bit and take a look at some of the emerging trends from the study. Just before we do, it's important to take stock of the current travel payments landscape and what the research is showing us. So, so for all survey respondents, the chart you're looking at on your screens now shows which methods used for both consumer to business and also business to business payments are either currently supported by the respondent's business, not supported but plan to be, not supported and don't plan to be, or the respondent didn't know. And to draw your attention to the top half of the chart, above the green line that goes broadly across the middle, it's perhaps unsurprising to note that the more traditional payment methods of cash, check, cards, and electronic funds transfer continue to dominate the landscape. Credit cards and cash being most prevalent, with over 85% of travel companies currently supporting them. We dig a little deeper, and again, perhaps unsurprisingly, we see that for some regions, the mix of payment methods varies significantly. Specifically in Middle East and Africa and Eastern Europe, where cash and electronic funds transfer play a much bigger role. And then turning your attention to the bottom half of the chart, so below that green line, in general, we observe that emerging or alternative payment methods, such as virtual cards, prepaid solutions, and mobile payments, have pretty limited awareness and uptake as well. However, the good news for eNett is that virtual cards are definitely making some headway, with almost 40% of travel businesses either supporting their use or planning to do so. Next slide, please, Jean. So with the payments landscape now set, for the research we identified, or from the research we identified the following 6 emerging trends affecting payments in the travel industry. So going through them, the continuing dominance of credit cards and how this will evolve, a shift towards payments at time of booking or prepayment models, an increase in agency to supplier direct relationships, the need for increased payment automation in travel booking systems, the challenges faced by travel companies when operating in an increasingly globalized market, specifically around managing FX, and then the rise of mobile payments, which, although barely measurable when we surveyed the current payment landscape, was in fact 4th on the list of major challenges felt by travel retailers when it came to managing their payments. So in the next section, what I'll do is I'll spend some time going through the first 5 trends and the challenges they pose for travel companies, and putting this in the context of virtual card offerings and how they help solve some of these challenges. So but to tee that up, let's go to a polling question first. So Kevin, back to you for that.
Okay, thanks Jason for the those initial thoughts. So let's have the second question for you all to cast your eyes over. If you could put that second question up, please, G. Okay, how would you rate your virtual card knowledge? Extremely knowledgeable, somewhat, or I'm a virtual card novice? I'm trying to recall, Jason, what we had on the earlier one this week from our APAC listeners. Can you remember what stats we had on that?
It was 40% virtual card novices. Remember that one?
Yeah. Well, I think there we go. 43% say they are virtual card novices again. 40% say they are somewhat knowledgeable. I think that's a slightly higher number say that they're extremely knowledgeable. So I think as we discussed on the one earlier this week, you know, there is an awful lot of understanding that needs to be had generally in the industry, given that so many of these are in inverted commas novices.
Yeah, and I think it was actually 16% extremely knowledgeable on the last poll, so we're pretty close.
Yeah.
But for the 43% of novices, I guess I'll very quickly explain the principles of a virtual card. So what is it? Sometimes called virtual account numbers, the virtual cards electronically generated and typically single or one-time use 16-digit MasterCard number, certainly in eNett's case. So for every single payment transaction that you're making, a new MasterCard number is created and used. And there's no physical plastic, it's virtual, as the name suggests. And the beauty is that authorization parameters can be set against each of the numbers to control how it can be used. For example, the amount that can be charged on the virtual card number, when and by who as well. And to a merchant, to a supplier, a virtual MasterCard looks like and can be processed like any other MasterCard where the card's not present. Okay, so without further ado, let's flip to the trends. So the slide you see on your screen, trend 1, credit cards reign supreme. And on the left-hand side, we show the share of US airline passenger revenue from sales directly through the airline's website by payment method type, and where 88% of payments were in fact made by credit card. If we take a global viewpoint on this, but by far that's a predominant statistic to the US. If we take a global viewpoint, the 88% of payments by credit card drops to 68%, diluted mainly by local electronic funds transfer solutions in Western Europe and APAC, as well as the importance or the remaining importance of cash and check in Middle East and Africa and Eastern Europe. And then on the right-hand side, we see a similar picture for airline sales made by travel intermediaries and settled through ARC. This is still in the US, with 90% of payments made on the corporate or traveler's own credit card versus the remaining 10% on agency cash invoice. And interestingly, across the rest of the world, for payments by agencies to airlines, the picture here is completely reversed. So of the $250 billion US of gross sales in 2012 reported by IATA BSP, 175 billion, or 70% of that, was settled by payment on agent invoice rather than card. So let's flip to the next slide, please, Jean. And it's a similar picture for hotels, or at least through their direct channels. So globally, 68% of bookings made on hotel websites and 87% of bookings made through other direct channels were made using credit card. So there's no doubt that credit card's #1 payment method worldwide, but not without their challenges. And really, this is where virtual card solutions come in. As an extension to that standard credit card model, they provide solutions to some of the challenges faced around payment processing inefficiencies, data reporting and reconciliation, multi-currency support, internal fraud and supplier misuse, PCI compliance, and so on. So, Jean, next slide, please. So trend 2, so the traditional method for paying hotels globally is for guests to pay at time of checkout. And trend 2 really challenges this model in predicting a shift towards supplier prepayment. On the right-hand side of the chart, somewhere between 1/4 and 1/3 of hoteliers responding to the survey expect prepayment methods to grow either a lot, with a further 40% of them expecting to grow a little. And for hotels selling direct, so looking at the chart on the left-hand side of the slide you're looking at, as many as 74% are already offering prepaid booking options on their websites. And we see that approximately 1/5 of all website bookings made are on prepaid rates. And turning to the world of air, a meaningful minority of travel agency bookings are conducted with the airline directly, and a change which has been predominantly driven by the rise of low-cost carriers, but also airlines choosing not to participate in the BSP. In both scenarios, credit cards already the predominant form of payment. However, significant value can be derived from travel retailers opting for newer virtual card payment methods to solve some of the challenges associated with prepayment in the agency channel. And that's principally around data reporting and reconciliation, but also when providing a prepayment method that can be securely rolled out across a whole organization. So the next trend here looks at the increase in agency to supplier direct relationships. And today up to 40% of global airline bookings are conducted directly with the airlines rather than through intermediaries. And these direct sales are on the rise. Sales on airline websites have been increasing by 2% year on year since 2010. At the same time, more than half of hotels are booked direct, 27% through hotel websites and 26% through offline channels. And turning to bookings made by travel intermediaries, middlemen such as consolidators are demanding increasingly higher commissions to provide services in assisting supplier distribution. And certainly in the airspace, this has come about by a significant reduction in IATA membership numbers, creating a premium for ticketing services. So to increase margins where possible, agencies are therefore looking at ways to cut out these so-called middlemen, building direct relationships with suppliers, and vice versa, with suppliers looking to forge direct relationships with agencies in order to reduce their cost of sale. And one of the things that's holding them back is finding an appropriate settlement solution to enable this. Again, somewhere where more innovative virtual card solutions can help by facilitating immediate and guaranteed payment between the agency and the supplier, providing a fully integrated solution that doesn't require significant technology investment to implement, because, as we said, it's just like any other MasterCard from a supplier's perspective, and provides controls that help reduce fraud and misuse, as well as multi-currency capabilities that enable broader distribution across the globe. So next slide, please, Jean. So trend 4 talks about the desire to increase payment automation. And in the research, we asked the question, which of the following criteria for virtual cards are most important for your organization when considering a virtual card provider? Reduced risk of fraud and protection against supplier default came very top at 53%. And for larger travel retailers, a couple of things really important: access to multiple currencies from their virtual card platform, and also the improved expense reconciliation that virtual cards bring, were both pretty important features, and that's what's called out in the yellow box on the slide. However, there are a couple of things that really surprised us from the response to this question, given our own experience. And the first was how high up the list automatic GDS integration came, and that came second place at 33% of respondents, highlighted by the orange box on your slide. And the second was how low down the list rebates or incentives came. In fact, it came last at only 6% of respondents. So given that, we thought we'd test this out with the audience today, which leads us into the next polling question, please, Kevin.
Okay, thanks, Jason. So the third of our 3 polls this afternoon is as follows. Okay, which of the following reasons is the most important for moving to a virtual card? Just choose one, please. So reduced risk of fraud, automated GDS integration, data and reporting, rebates, or the final one, not applicable to my business. Okay, let's see what you all think. And can you recall, Jason, what we had last time? I think we had quite a strong winner on this one again, didn't we?
Yeah, it was pretty well reflective of the Focusrite research, which was interesting.
Yeah. Okay, let's have those results up now, Jean, if that's okay. So 38%, we can get those results up. 38% say reduced risk of fraud, nearly a third say automated GDS integration, 70% data and reporting, just 3% on the rebates, and only 11 say it's not actually applicable to their business. So with that, I'm going to hand you back to Jason.
Thanks, Kevin. So from the survey, actually 40% of agencies believe that virtual cards could increase efficiency through GDS or point of sale integration, and it's really the TMCs, the travel management companies, who are especially interested in the process efficiencies, enhanced data capture and reporting, and the reconciliation benefits to be gained from this tighter integration of the virtual card into the agency selling platform. And this is an area where eNet's been focusing on quite a lot recently. In fact, we recently released our new GDS app for Travelport's Galileo desktop and SmartPoint points of sale, which enables the booking agent to quickly create a virtual card within their standard workflow. And this slide really is just a snapshot of briefly how that works. So just to step through it, an agent makes a booking as usual, then simply all they need to do is type hash VAN, so VAN stands for virtual account number in our language, into their terminal window. Then what happens is booking data is automatically captured from the PNR, from the booking file, and the request for the virtual card is made. Then the agent simply checks the details around that card, that VAN, virtual account number, are correct, enters their password and hits submit, and then the virtual card payment details are automatically written directly back into the PNR. So it really is simple, and it really does try to enable smoother payment through the current workflow process of the agent. Okay, next slide, please, Jean. Okay, and then very quickly for the last trend, it's considering how travel companies are managing their cross-border payments. Larger travel retailers more likely to operate in multi-currencies and maintain multiple foreign currency accounts in order to do this. And the slide actually shows the very top 3 bars that this is especially prevalent in the wholesaler industry sector. The cost of running multinational, multi-currency accounting operations means that even these large guys who are doing this have potential efficiency gains to migrating to a single global payment platform. But really, it's most often a pain felt by the smaller or small to medium-sized travel companies who commonly lack the infrastructure and skill set to manage foreign exchange transactions effectively in their business. And this is another area where global multi-currency virtual card platforms have a really important part to play, both in simplifying the processes, but also around reducing those FX costs. Okay, Jean, next slide, please, and back to you, Kevin.
Okay, thank you very much, Jason. So that's the eNett view on all this. So let's get hear what MasterCard has to say. So I'm obviously very delighted to introduce again, second time this week, Luis Yofe. He's the Senior Business Leader on the Travel Payment Solutions Division at MasterCard Worldwide. Over to you, Luis. Looking forward to hearing what you've got to say.
Thank you, Kevin. And Jason, great presentation. I would like to go over the view of the real total cost of the true cost of the payment solutions. Organizations usually tend to look only at the merchant fees and the airline surcharges that are popping up right now without considering the actual total cost of the manual processes and the reconciliation and the reporting on any payments on invoices or tracking of commissions across multiple platforms and currencies, taking into account the cost of foreign exchange and of course the delay of the cash flow and the potential cost of the of fraud or the default of a supplier. And the next slide, this is a pretty busy slide, but the survey tried to capture the changes in the surcharges being assessed by different suppliers for the different payment methods. Airlines are reporting now surcharges for a range of payments in the different booking methods. For example, payments for bookings via the GDS or even website bookings right now are being assessed some additional surcharges for some of the form of payments. On the hotel side, you're not going to see any surcharges, and we, based on the survey, we don't think there are any plans to do so for most of the hotels. But the more of half of the traditional travel agencies add already a surcharge presented as a service fee or padded or bundled into the service fee for different form of payments. We think that despite of all the surcharges for credit cards here at MasterCard, our internal research shows that credit cards on the average are about 37% cheaper than alternative payment solutions. Next slide. 40% of agencies typically settle through direct billing or some kind of manual payment. Invoice reconciliation, the airlines and travel agencies seems to have the lowest cost of managing payments, probably due to the automation provided by back office systems and the GDSs and the centralized controls. But on an average salary of about $30,000 US, $15 an hour for manual payment processing is costing agencies at least $300 a week. So these are some of the numbers, depending on the size of their operation, what we think is going to cost them to process manual reconciliations and payment settlements. 37% of TNCs use virtual cards, and you know, take into account that when we talk about virtual cards here, it's not we are very familiar in our industry, in the travel industry, with the large card concept, the central travel account, the business travel accounts, where there is actually no plastic issue, and it's a form of virtual card, but it's not exactly what we're doing right now with companies such as eNett, generating individual virtual cards for each one of the transactions, enhancing the reporting capabilities and getting closer to 100% match to be able to reconcile every one of the payments. But we are very familiar in the travel industry with the utilization of virtual cards or the large card or the ghost account. They're all forms of virtual accounts. Next one. One of the interests, as you saw before in Jason's presentation of the findings, was prevention of fraud, and clearly a major concern in the industry. Some interesting numbers that in the emerging markets, there is a great concern about fraud. Areas, in particular in Africa and Latin America, where there is a reluctance from corporations to issue individual plastic to travelers, even to frequent travelers. In some cultures, only executives seems to be getting cards. There is a great need for the travel companies, in behalf of the corporate clients, to pay or prepay for the hotels and other arrangements to make sure that they don't have to disperse cash or have to deal with large items in expense accounts. So the utilization of the deployment of virtual cards to be able to make payments, prepayments for travelers that do not carry corporate cards is a major opportunity. And like Jason mentioned, the ability to create controls on the individual cards, in virtual cards as they are issued, specifying a type of merchant or even an individual merchant, putting limits on the amounts and controls, limits the possibility of fraud, the major concern that we have with payments at the moment. Next. For TMCs, a major point of pain is collecting commissions. There are assumptions being made by travel management companies that there will be a breakage and there will be uncollected commissions, and they need to calculate that in the cost of providing services to the corporate clients. In many cases, when they are cross-border transactions and international bookings, sometimes the hotels will send a check, and the value of the check is less than it will cost for the travel agency to process that payment to claim the commission. Prevalent in the Middle East, Asia Pacific, Latin America, and North America, they are a large percentage of unpaid agency bookings, where the travel companies are billing back clients, and although it's a small amount considering the amount of the transactions, there's still an opportunity to utilize card payments to eliminate the accounts receivables and the process of the booking fees. Next one. This is an interesting view. The amount of time, or the lag between the time that the travel agency pays through the bank settlement plan, IATA, or the VSP or ARC in the US, it takes about 17 days for the airline to get paid. Hotels that are on a bill back program usually offer a 30-day payment solution. And by moving all these payments into cards, you have a much quicker settlement with the suppliers. In summary, we need to consider the total cost of processing the different kind of payments. We need to understand the opportunities that we have to have global programs. We see more and more corporate clients globalizing their travel programs, and the complexity of the payment solutions in different countries, in different markets, create an opportunity for fragmentation of the data and great pain points in the reconciliation and the ability to really understand to a granular level the spend in 100% of all the travel transactions. So we think that for a period of time, the landscape will remain complex and fragmented, but we think that the result of the research validate our belief at MasterCard that solutions that we are providing through partners such as eNett and others to bring products that are specifically designed for corporate travel payments beyond the traditional airline transaction through the BSP, and enabling corporate clients to provide their travel companies with payment solutions through cards, the use of the individual cards, the capture of data, the ability to reconcile 100% of the transactions, and penetrating some of the categories of payments that today are not on the card, that require large items on an expense report, and in many cases management of cash disbursements, and sometimes reimbursing travelers for expenses that were put on a personal card because of perhaps lack of acceptance of the corporate card that they travel with. I think that we continue to see innovation and opportunities to bring solutions to the travel industry, to the corporate travel ecosystem that will reduce the cost, minimize the risk of fraud, and provide analytical data to a deeper level that we have today due to the fragmentation of the payment solutions in the industry.
Okay, brilliant. Thank you, Luis. We've got quite a few questions that have come in the last 5 minutes. So we've got, let's say, roughly around 15 minutes here to so that you can quiz our panel. You can do so by clicking the questions button on the right-hand side. So before we dive in, there's one here that's come from Tiago. I hope I pronounced your first name right. Thanks for your question. Tiago asks, specifically, are there any countries which can be considered to be, success cases for virtual card payments so far, given that it is a relatively new discipline as such? I mean, are there any ones that are really that have kind of gone ahead or that have performed better or are using them more than others?
I'll take that one if you want this. So from eNett's experience, we've seen lots of success around sort of deployment of our cards across Western Europe region. I mean, a lot of the adoption for virtual card platforms has been driven out of some of the larger players, and specifically the OTAs, so Expedia, Priceline, and such like companies. So it's really follow that trend. However, having said that, given the global nature of the virtual card platforms that are out there today, actually it transcends boundaries. So the applicability of the virtual card solutions is much broader than where we've seen relative success today.
Okay, we've got some very, dare I say, practical questions in, as we did with the one earlier this week. I think it really does show how this is in its relative infancy. So, first of two questions here from Matthew Tay, or Ty, I hope I've got your surname. Regarding trends, Matthew asks, full payments at the time of booking, what is the average transaction size, question mark? Does this trend hold true for transactions less than, more than $2,500 US?
Might have to take that one away, Kevin. I'm not sure we have the data to be able to answer that one.
That's fine. Yeah, what we will do, because we are getting a lot of these coming in now, we'll take a note of all of these questions and then share them with the panel afterwards. So we'll move straight to Matthew's second question. So thanks again, Matthew. So which was, he says he's new to the travel space. So what are the particular challenges that travel payments have versus regular payments? Dealing with multiple currencies, or is it dealing with suppliers in multiple countries?
Jason, you want to take that, or I take it?
Yeah, go for it, Louis.
Okay, so this is Luis. They actually the deployment of individual virtual account numbers enables if the issuer, if the bank that is behind the program for that corporate client is able to issue cards in a currency other than their home country, and that is the case with many multinational banks with presence around the world in many countries. You actually have an advantage deploying virtual cards, because you could actually generate a virtual card to make a payment cross borders in the currency of the merchant. So you may be based in the US, and if your bank allows you to do that and have the ability to, for example, generate a virtual card in euros, you can generate a payment for a hotel, let's say in France, in euros, facilitating the transaction. So we see it as enabling cross-border transactions in multiple currencies and eliminating the barriers many times of accepting a card in a different currency in a different country.
Sorry, thank you very much. Question from Henry Hartwell. Hello, Henry. He says, mobile payments were mentioned as a trend, but he says he doesn't believe this has actually been discussed. So let's have a little discussion. We'll go to you first, Luis, on mobile and your particular thoughts on how this is kind of hitting this particular issue.
Yeah, absolutely. And this is, yeah, we didn't talk about it, but it is a trend. The technology exists today for mobile payments. It is, for example, just to visualize, many airlines have enabled us, for example, to check in and have a mobile boarding pass with, let's say, a QR code or a barcode that we can use now to not only go through security checkpoints, but also check in for the flight using our mobile devices. We have the ability at MasterCard, we have the platforms and the technology to deliver a mobile representation of a virtual card, for example. The challenge for a while will be the point of sale terminals, or the technology deployed at every point of sale, where you can go, for example, to a hotel and check in and present a virtual card to the front desk. They will have to have a terminal with the ability to scan and capture that payment with a proximity cards, for example, like PayPass, or actually with a QR code or a barcode and the ability to pay. The technology exists. It will take time for the adoption. In some markets, what it will take is for every, the time it will take for the technology to percolate down to the point of sale of each one of the merchants in the travel space. The technology exists and the trend is there, and a great interest in combining the ability to generate cards with controls and presenting through a mobile platform a device to present payment to a merchant.
Okay, and Jason, thoughts on mobile in particular?
Yeah, just to reflect the results coming out of the study, and which I did mention earlier, was that out of the major challenges faced by travel retailers specifically, fourth on the list was how they were going to handle accepting mobile payments. So it's definitely on people's mind, as Luis just stated. The technology exists. It's all about adoption and how quickly they can get adopted. Okay,
quick draw McGraw-Henry has come back straight away and has said, to your point, Luis, I mean, how long until that terminal deployment for mobile? Is it 3 years, 5 years, or perhaps even longer?
No, I don't have a crystal ball for that. I really don't know. But I anticipate a acceleration of the adoption and the deployment of these emerging technologies. Things are happening rather quickly. But just that now, considering that we have colleagues from the U.S., for example, in Europe, there's a broad adoption of the chip and PIN technology for the cards. And we have not deployed that in the industry here in North America widely, and it will take a couple of years for us in the industry to deploy the technology in the U.S., considering the scope of the work and the amount of point-of-sale locations in North America is a mammoth task. But that's an example of some of the advanced technology that are already being adopted in some parts of the world, and we're still a little bit behind in North America.
Okay, just for all of you, please don't be dismayed if we don't get to your question. As I said earlier, we will take a note of all of these and direct them to the panel afterwards, because we have had, dare I say it, a flurry of questions coming over the last few minutes, and I'm actually struggling to see them keep up with them on the screen here. But one here from Thomas Wang, and let's go to you, Luis, on this one. Thomas says, what are the advantages and disadvantages of credit cards versus PayPal?
The adoption, clearly, the adoption of the payment. I mean, we have right now MasterCard is accepted in 210 countries, and clearly the ability to utilize existing authorizations and processing methods that have been well established, and relationships between the merchants and the processors, the acquiring banks and the issuing banks. So it is a very well established payment platform, very well understood with clear rules, and very sophisticated technology for the processing, not only in a particular market but cross borders, a global solution. Clearly a different type of ecosystem.
Okay, a question for you, Jason. Aideen says, is there a cost per issue of a virtual card, or how do the charges for travel agents work? Thank you, she says.
I guess that would depend on your virtual card provider. So talking from eNett standpoint, we don't charge a transaction fee, so we don't charge for every single card issued. I think when you get to bigger travel agencies who are using these cards for every payment every day, you're getting into thousands and thousands of transactions a day. So it wouldn't become cost effective for us to charge a transaction fee per card. So for eNett's model, the answer is no. We don't charge a fee per card. There's a small subscription fee we pay, and then we also offer our customers incentives or rebates for using our virtual cards for paying travel suppliers.
And just on that subscription fee, is that set, or is that depending on the size of the agency? Can you just explain that one to us?
It's a nominal amount. It's $10 per month per account. So an agency would typically have one account, so they'd be up for $120 per year to use the service.
Okay. Question from Daniel Bicari, a disclosure here, he does write for us occasionally. So he asks, how much is the merchant fee percentage in the case of a virtual card as compared to normal cards? Jason, please.
As we said earlier on, the virtual card to the supplier is like any other MasterCard. So in the case of eNett, it's a corporate MasterCard type, so there would be no difference to the supplier on accepting an eNett virtual card to a corporate MasterCard.
Okay, thank you. Doug Anthony asks, how do the panel fill virtual cards will address lack of folio data on hotel transactions? Luis, if that's one for you, possibly.
Yeah. Well, for the advantage of the way that at MasterCard we are deploying our technology for the generation of virtual cards is capturing the booking information at the time of the creation of the card. So a travel counselor using, let's say, the eNett desktop solution is in the middle of a booking. It has a record, a PNR or a reservation file being created with all the information that moved from a travel profile and all the details related to a reservation, a hotel, a confirmation number, the dates, all the details of the transaction. Request from the MasterCard platform a virtual card to pay for this particular hotel. Controls are applied to this virtual account number, and all this data that is captured at the time of generating the card and inserting the card into the booking file or the PNR is captured by our database, and it's being held by the global data repository at MasterCard. When the actual transaction gets processed through the clearing in the credit card system, the hotel will process the charge, and it comes through clearing. We will see that transaction. We will match that with the data set that we were holding from the creation of the card with all the details for that booking, and we will pass that enhanced data to the issuer so they can include all the details into the statement presented to the corporate client.
Okay, thank you very much. Right, so we're coming up to time here. So just one what I think is interesting here. So Mark Champion, great surname there, Mark. Are virtual cards only suitable for corporates, or can you actually see consumers starting to use them? And we'll go to you on this one first, Jason.
I think the rise of virtual cards actually started to try and encourage more e-commerce, so more purchase on the internet. So actually that's where they've started. It's only more recently, so past 3 to 5 years, where they've become much more prevalent in the consumer space. So I'm not sure whether we'll see a reversal of that trend, but certainly an interesting observation. I think where you think about the benefit of virtual cards around data collection, reconciliation, that really does fit quite nicely into the corporate and the travel agency model. And that's really why we're seeing a big rise in demand from travel companies for virtual cards today.
Yeah, and Luis, then, I mean, do you have an opposing view on this? What Mark asks here about consumers using them?
No, we have already deployed our platform. Actually, we first deploy our virtual card solution, virtual account number solution for consumers in the retail environment, and then we develop from there our corporate virtual card solution. So in some emerging markets, Brazil, for example, is a huge adoption of virtual cards by consumers that do not want to expose the real account number on e-commerce. So, no, I think that there is already a market and great adoption in some countries of this concept and platform.
Okay, and the final word goes to you then, to Jason. I mean, do you sense in, let's say, 2 or 3 years' time we'll be having the same types of conversations around this, or do you think there'll be a lot more of adoption around the industry, and what do you think some of the issues will actually be in 2 or 3 years' time? So
I think we started off by seeing 43% virtual card novices on the poll. So it's true of today that a lot of education still needs to be done in the travel industry around sort of virtual cards and the benefits that they bring to the travel management companies and the travel agencies at large. Adoption did start or has started mainly with the larger companies. We've seen that. They're very familiar with the processes. They're benefiting from the virtual card schemes today. We're focused on, and we're predicting that there'll be maybe not a revolution, but further adoption down to the smaller, so the large to medium-sized agencies next, and knowledge and usage of these cards will become a lot more prevalent in the travel industry in the next not too distant future, the next couple of years. So
it's okay. So to use a cliche, it'll be evolution rather than revolution, you would say.
Indeed.
And
right.
I just to second that, I believe that in 3 years we're going to be talking more about mobile, and it will be clearly understood and adopted. The concept of virtual cards, we're not going to be talking in 3 years about it. It's going to be every day for us. We're all going to be using it somehow, somewhere.
Brilliant. Okay, so right, apologies to all of those, and as I said, we did have quite a few of those questions come in very late at the end, so apologies to those of you that didn't get your question aired. I have made a note of all of these, and I'll be circulating them to the guys at eNett and MasterCard over the next day or so, and hopefully someone from one of their teams can come back to you with a definitive answer, or indeed one of the panelists themselves. So apologies for this last slide here. We obviously won't be presenting this because you've just been listening to it. So to remind you all, we have been recording both of the webinars that we've produced this week, and as I said earlier, they'll be up on tnooz.com in a single article, including all the slides, I hasten to add, hopefully within the next 12 to 18 hours or so, as quickly as we can process the footage. So thank you very much to our two panelists. That's Jason Hancock from eNett International and Luis Yofe from MasterCard Worldwide. Brilliant presentations, and thank you very much for fielding as many of those questions as you could. Obviously, last of all from us, thank you very much, obviously, to eNett International for supporting this webinar. Thank you all of those to you that have listened in and submitted your questions. We look forward to having you on another Tnooz webinar in the future. But that's it for now. Enjoy the rest of your days. Cheers.
The organizer has